Good day. Ira Epstein of Linn Associates with your agriculture wrap-up, and this is for Wednesday, the 30th of October, 2019, and we're right now after 3:15 p.m. Central Daylight Time. Mixed day in the grains, powerful day to the upside in the bonds and notes, even though the Fed went into a pause. They did cut interest rates today, another quarter point, but the Fed initiated the idea that this is going to be it for a bit. They want to see how these three rate cuts that they've recently given us do. The stock market liked what it's heard because the Fed also implied it's there if the conditions warrant it. Metal markets rallied because the Fed said it wants to see more inflation. So they're behind that market. Dollar index down a little bit. We're looking at energies on the lower side, big EIA numbers, and now there's talk, as you go into the grains, of course, about renewable fuels and what this ethanol program and all these waivers that the Trump administration keeps handing out, what's it going to do for the corn farmer? The next thing that you have to keep in the back of your mind is what about the U.S.-Chinese trade? And that's on the table today. Chile has backed out of holding the conference that they were due to hold on the 16th and 17th of November due to social unrest there. I've talked about that as copper prices, while they're down today, they have been on a tear to the upside. It's not about demand. It's more about their supply cuts because of strikes, protests, port shutting down, and so on. You would have thought maybe that's a negative further because China is saying they can't do the $40 or $50 billion of grain purchases right away. I know we keep hearing it from our administration. Steve Mnuchin came on today. He was on a Reuters interview and said that's going to take time. The question is, can they even do $20 billion with us? At the same time, they insinuated and offered a place to hold the next meeting, so things aren't quite off the table. That's good. We're in harvest. You know that. We're in wet weather. You should know that. In the Chicago area, we woke up to 1 to 3 inches of snow today. Yeah, the snow. Cold weather. We're talking 30s, and we're not going to get back into the high 50s for quite a while. So we're getting cold weather. We're back to when I was a kid. We'd have for Halloween snow on the ground. I don't know if Chicago itself will have it, the city, certainly all the surrounding suburbs. I'm not talking countryland, I'm talking the immediate suburbs. They had it today. Whether it stays, I don't know, but we're due for more. But in the process, you've got to ask, where's the farmer with the equipment? Can he get out into the fields? How bad are things? Is there going to be any lost grain? Is there going to be too much moisture in it? There's a lot of questions come up. But we are still feeling somewhat the harvest pressure. We're down 4 cents. And if you take a look at the most recent high this market made on a closing basis, it was up to the 936 level. And so far, right now, we're back 20 cents lower at 916. That's all that I'm trying to say. When I look at this chart, it looks like it's leaking to the downside. And when I put the swing line on it, you see lower highs, lower lows. That's a bear signal. Market would have to take out 926 to break that signal at this point. That would be only 10 cents away from the most recent high close, by the way. If you also take a look at where you're at, you're under the red line, which is the 18-day average of closes. Now, I consider the 18-day average of closes the line in the sand. When the market's under it, I have a bearish bias. It says yes or no to the swing line. It's one way to look at it. When it's over it, it's a bullish bias. Right when you come down to it and you rally, it's often a first area of resistance. And if you are over it and you fall down, it's not uncommon that the market tries to check that out a few times to see what it's going to do. Then I look at Bollinger Bands, very, very popular study. And traders, some of them like to contra trends. In other words, first time you hit the band, they want to go short. Others want to buy it the first time you hit it. I'm not at that camp at all. I think it is an area that the first time you hit it, if you have shorts, you're covering. But I've seen too many times you go short and the market keeps running on it. That's not the game plan that I go with. I am looking for support at the 912.25 area if it's hit. In terms of momentum, you're oversold, nowhere near the stage where both numbers that make up the oscillator of the slow stochastic are going sideways under 20 and locking in a trend. That's not what's going on. So I see support in this market starting at 912.25. The 100-day average is around 910. So that general zone is where I'm looking for the initial support. In the meal market, my eye goes to being oversold, lower highs, lower lows. 301.10's the Bollinger Band. Wouldn't be surprised if the pros came out of shorts if that was offered to them. But you had an outside day down yesterday also. If you take out the high of yesterday, and that high was specifically 305.80, because these key averages are above it, that negates the downtrend as well. What am I saying in plain English? Bearish until there's a reason to be knocked out of the market, and they're coming fast and furious. In the soy oil, still a strong market. This market is like canola on the strong side of it. Remember, soy oil is not the most popular edible oil. Canola is the one that we look at here. And you can see how this market's going to the upside. You got coconut oil. I can go on and on. There's so many of them. But higher lows, higher highs. You had hit the upper Bollinger Band. You've backed away, and now you have divergence. You have momentum trying to come down. Prices trying to stay up, and they're into a resistance area. In the corn market, today negates the downtrend, and you're going to say, well, look, what's he saying? If you look at this high, it was 390 3/4. Today's high, 391 1/4. So now I have a higher high, lower low. That negates it. Sideways action. We've been talking to farmers. This morning we had meetings on cattle and talking corn. And we're hearing that there's a lot of moisture in the Illinois, Indiana, and Iowa crops, much more than normal. If that is in fact the case, and that's not just a small area, well, what that does to the farmer is it takes money out of his pocket. Somewhere along the line, he's got to take that moisture out. He's got to go to propane, natural gas, depends what he's able to do. Most people, it's the propane in the farms. And that could be an area where the farmer says, you know, I'm going to hold my prices back for a little bit. In the wheat market, we've been pulling back. We're into support at the 18-day average. The next level's 502 3/4. But if you get to that level, you break the uptrend because you've got a pattern of higher lows, higher highs, but the current break hasn't taken that out. If you do under the 504 1/4, you go into what I call more of a flat market with a higher high and then a lower low. I think the bulls have to make their stand right now, right here. Their problem is momentum, which often leads price, is pointing to the downside. Remember, we have our winter plantings going on. There's a lot going on in this market. It's got to make a stand if it's going to be good, I think, right at these prices. Sugar market, void of trend. Lower low, higher high. Now, 3 days in a row, just fighting at that 18-day average. Again, you know I call it the line in the sand because it's from here it decides what to do. Without taking out today's low on Thursday, you would have the swing line turning up with higher highs. That would put this area, if it wants to run to the upside, is the resistance 1261, 1274. If you take out today's low or you don't close over 1238, you're still putting into play the possibility of getting back to 1214. Tomorrow's going to be the day it tells us what it wants to do, I think. Coffee got overbought. It's been in a corrective mode. Now, if we come back here, you can see how the market right here started the overbought. Then the resistance would be the combination if it gets there, but it is resistance regardless of the 100-day average upper Bollinger Band. You reached up to it. Overbought, starting to correct momentum, and that's where you're at. Support back here, but even, I don't know that the bulls will step in. You're still too overbought from my conditions to want to be a buyer. Is the trend up? Yep. Has it hit an upside target? It certainly has. In the cocoa, this is just a hard market. Today, the market confirmed higher lows and a higher high. Problem is you had an outside day down, and you closed under yesterday's close. I'm going to call that neutral. Momentum down. You put into play the upper Bollinger Band of today's high, which is the high of an outside day that's down. That's taken out. High probability of getting up to the upper Bollinger Band. Doesn't have to do it, but it's a high probability the way that I chart. In the cotton market, overbought, nowhere near embedding. Uptrend, outside day up. Unless you take out today's low tomorrow or Friday, I look for the market to try to make another run at that upper Bollinger Band. We'll see what it can do. Cattle market. We had a good meeting this morning in the office before trading really got going in the cattle. And we were talking, they came over and they were asking me what I'm seeing in the charts because we have a lot of commercials that we work with. And I said, until you lose this embedded reading, why is anybody trying to pick a top? You're going to get at times to the upper Bollinger Band. You generally pull back from it, wait for it to turn down. Hasn't shown any sign. Feeder cattle joined the upside today with higher lows, higher highs, a breakout into the upper Bollinger Band, but it got overbought in the process. And in the hog market, we now have a pattern of a lower low. This is 63.72, 63.45, and a higher high. So this down leg, the way that I chart, came to an end. It did not begin an up leg. You don't have the higher lows, higher highs, but you are oversold. Two levels of resistance, 67.30, 68.60. 2.5, and we know traders have been trying over and over to get long this market, hoping the Chinese would step in and do an awful lot of buying. Some morning it's going to happen. I don't know when. You know, one of the things that you know that I do is I put out these special video reports for you. Today is the last day of my stock index report. I did it on the S&P, and I'm pounding my chest. You take a look at it. It comes off today, so you have the next 10 hours or so, but midnight it probably just disappears. They only stay up 5 days at a time. I'm now looking to see the next one that I want to do. It will be out very shortly. I'm looking at charts to see what I think is the best one to do a video report on. Now, I cover the seasonals, the monthly, the quarterly, price counts. I do an awful lot of work in these. So if you'd like to look at it, go to www.iraepstein.com. Go to the word research when you're there. You'll see a drop-down menu. It'll say the metal report. You can also click up here to get that at any time. I'm Ira. You have a great day, and I'll talk to you all tomorrow.